Right, hello and welcome to Camel Finance. I'm your boy Camel, and today I want to talk a little bit about BitVM. I also want to talk a little bit about inflation and Bitcoin dominance. I've got some couple of nice things to say about Ethereum for a change, and also some pretty worrying data for anyone holding Ethereum. I'm going to talk a little bit about rate hikes because, of course, we're in an inflation week, but the bond market and the banks are kind of telling us what we already know, I think. And then we're going to look at some charts because I think it's almost time to take some positions. So I'm going to show you all of that. You may or may not have seen BitVM, this whole thing going around Twitter at the moment. A lot of people get excited about this. I'm personally not one of them. But for those of you that don't know, I'm just going to read you the abstract, okay? So BitVM is a computing paradigm used to express Turing-complete Bitcoin contracts. Now, Turing-complete just means essentially anything that can be computed on any other computer. So we're talking anything from gaming to applications, anything that can be performed on another computer should, in theory, be able to be expressed on Bitcoin via these Bitcoin contracts using the Bit virtual machine. So the other interesting thing about this is it requires no change to the network's consensus rules, and rather than executing computations on Bitcoin, they're merely verified. Similarly to optimistic rollups, a prover makes a claim that a given function evaluates for some particular inputs to some specific outputs, and if that claim is false, then the verifier can perform a succinct fraud proof and punish the prover. So we're essentially talking about smart contracts here, and you'd stake a bit of Bitcoin. I'm oversimplifying a lot, but bear with me. You stake a bit of Bitcoin, and then if anyone tries to engage in foul play, you can punish them by removing or forcing them to hand over their staked Bitcoin. And so using this mechanism, any computable function can be verified on Bitcoin. Now, I said earlier on, we could potentially have games or applications. It doesn't mean they'd be efficient. It doesn't mean they'd run. It doesn't mean they'd work well. But in theory, anything that can be performed on a computer could be expressed and verified on Bitcoin. Committing to a large program in a taproot address requires significant amounts of off-chain computation and communication. However, the resulting on-chain footprint is minimal as long as both parties collaborate. They can perform arbitrary, complex, stateful off-chain computations without leaving any trace on the chain, and on-chain execution is only required in the case of dispute. So, I mean, a lot of people are getting super excited about this. A lot of people are saying this is going to be an Ethereum killer, and to save you the hassle, obviously, if you want to go and read this, you can go to bitvm.org, and if you're interested in this sort of thing, of course, go and do your own research. Don't take my word for it. But I didn't want to spend too much time on this, so I've just basically made this little summary here, and hopefully you'll appreciate that. Look, the main thing with BitVM is that it adds more programmability without having to fork the chain or upgrade the protocol. It can be implemented right now, basically, okay? It would, in theory, decentralize apps that are currently not so decentralized. So this would be things like sidechains, coin joins, oracles, etc. We'd probably be able to get more decentralization out of that. But BitVM is highly complicated, and thus, in the real world, it's probably going to be difficult to implement, and it's also pretty difficult just to simply understand it. So in my humble opinion, it sounds like a cool idea, but it's still very, very early, and no one really knows if we need this or if it will actually solve any real-world problems. And despite me bad-mouthing Ethereum all the time, which if you've been here before, you'll know, I rarely have anything good to say about Ethereum, but BitVM is slower, more expensive, and much more complicated than Ethereum's virtual machine. Okay, so we really don't, in my opinion, we don't really need this, but it is what it is. This is also, by the way, not what Satoshi wanted or envisioned. He wanted Bitcoin to be a peer-to-peer, permissionless, decentralized medium of exchange and a store of value that was free from central bank chicanery. I personally do not like this idea, and I've put ordinals here because I think the way I view ordinals is the same as I'm currently viewing this BitVM thing, right? So for me, ordinals, I think they're silly. I don't really care. I'm probably never going to use them, right? I don't really see the point. But at the same time, if we really are going to have a permissionless, inclusive, decentralized protocol, then everybody has the right to do whatever they want on chain on the secondary layers, right? And as long as Bitcoin Core remains unchanged, as long as the hard cap supply remains at 21 million, as long as all of the things that we use Bitcoin for in the first place, right? As long as the core underlying base layer protocol remains unchanged and unadulterated, then Bitcoin will keep doing Bitcoin things, TikTok next block, and if people want to be silly and inscribe things using Taproot on the secondary and third layers, then you do you, right? So that's kind of how I feel about this. If people want to build smart contracts and applications and whatever on the additional layers, then they have the absolute right to do so, even though I think it's personally silly, and it's also not what Satoshi wanted. But will it affect Bitcoin? No. as I said before, TikTok, next block, Trueflation added aggregate inflation to their dashboard, and it's pretty sobering, right? So since October of 2020, the UK aggregated inflation is over 33%. And I put this out and I said, look, have you got Bitcoin? Because Bitcoin is up 243% against the GBP in that same time frame. And if you're wondering what it's like for America, America's aggregated inflation since October 2020 is over 20%, as you can see here. Now, against the dollar, Bitcoin is up something like 150% versus the 243% against the GBP. But in either case, it goes to show that despite being down currently, nearly 50-60% from our prior all-time high, Bitcoin is still the absolute best place to store your wealth and to hedge against inflation. A lot of people are quick to come out and say Bitcoin is not really a good inflation hedge because it has these big 70, 80, 90% drawdowns in bear markets. But even with that, we are still absolutely smoking, okay? So I ask again, have you got Bitcoin? Have you got Bitcoin? Because you're probably going to need it. Bitcoin dominance is not something I see very often, but I saw this yesterday and I thought I'll have a quick look at it, and I found some pretty interesting stuff, so I'm going to share that with you, okay? Bitcoin dominance is pumping. Why are so many influencers buying alts here? It's a great question, okay? At least wait for this trend line to break down in dominance before you start buying altcoins. That's what I think, right? Now, I'm personally not an altcoin person, as I'm sure you know, but I thought, let me pull up my chart and we'll see what we got. And I think if we look at this and forget that it's Bitcoin dominance, right? If we just treat this like it was some penny stock or some stocks and shares chart, right? What do you really see? And I've made this argument time and time again, right? I see this big range at the bottom, right? And a clear line here, right? In blue. Since then, what have we done? Breakout, retest, and looking for that resumption, confirmed by a break of this downward sloping pink resistance line. And like I already showed you on the other thing, we have this upward sloping red support line that we're holding. So if this wasn't dominance, right? Like I said, if this is just a penny stock or some stocks and shares chart, what would you say? I made this case before. You wouldn't sit here and say, wow, breakout, pullback. The only logical thing that comes next is this, right? But for some reason, just because it's Bitcoin dominance, when we were in this neighborhood up here at 52%, everyone was saying, that's it, that's the top. And I made a video at the time and I said, that doesn't make sense, you know? We got a massive, massive bottom, range break, retest, looking for that resumption. So, and I made this case at the time as well. I said, look, 60 to 70% seems like the bare minimum to me, right? If this was a stocks and shares chart, why would you be calling for this? That just doesn't make any sense. So I think we probably are going to run at least 60 or 70%. And so far, admittedly, this orange fractal is pretty speculative, right? But so far, it's kind of on pace with it, right? So like I said, we still, at the end of the day, objectively as possible, have a range break, retest, and resumption confirmed by breaking that one as well. So I think this probably continues to run higher, and thus, I think altcoins are probably going to be suffering in the short to medium term at least. Speaking of altcoins, have you noticed that there's a massive, massive difference between Bitcoin and Ethereum whales? The ETH whales are all in a massive downtrend versus the Bitcoin whales, which are all either flat or in an uptrend. You can see the green, right, is ETH whales, massive, massive downtrend, and you can see the Bitcoin whales aggregated up or flat. When we zoom in on the Ethereum whales, right, this is balances for 100,000 ETH, right? Look at this massive downtrend. What the heck, right? I'd be seriously concerned if I held any ETH. Now, again, look at this massive downtrend on the right, okay? This is 10K to 100K ETH, and this is 1 to 10K ETH. Look at this as well. Massive, massive downtrend since all the way back here. So again, this is data that I think would be very important to consider if you had a large bag of Ethereum. Moving on to interest rate hikes, okay? Still sat around 86%, but given we've got PPI, CPI this week, and a bunch of Fed speak, I would expect some volatility here. And of course, the general rule of thumb is if we get CPI or PPI, if we get inflation go upwards, then this is probably coming down, right? And the inverse is true as well. So if inflation starts to come down, then the likelihood of this increasing probably goes up. But things start to get super, super interesting here. When we look at the banks, okay, look, this is Bank of America. They are sat on over 100 billion of unrealized losses as a direct result of these interest rate hikes. Remember, as they hike the rates, the bonds go into unrealized losses. And you can see that here. They've got 113 billion. This is Bank of America, remember. 113 billion of unrealized losses on its balance sheet, which represents over 60% of its tangible book value. So Bank of America is wrecked, absolutely wrecked. And if they continue to hike rates, this is only going to get worse for the banks, right? Meanwhile, the bond market, this is the 10-year yield, the chart of truth, it's still way too early to put any confidence in this, but seems to be, for the first time in a while, looking for a rollover and a reversal. Now, why would this happen? Well, because the bond market knows that we're not going to see any more rate hikes. So it's going to be really interesting to keep an eye on this. It's going to be interesting to see what the inflation data looks like. And as these come off, we'd also expect the dollar to weaken as well. So speaking of the dollar weakening, it looks like we're finally at this moment in time, doesn't it? So assuming we don't get super hot PPI and CPI prints, I would expect this thing to continue to break down. And let's take a look at the euro dollar. Look at that, right into resistance. Is it getting ready to break out? Is this getting ready to pressure the dollar basket? Something we've been looking for, something we've been waiting for patiently, and it seems to me like it's here. So it hasn't done it yet, and it could, of course, reject at resistance and roll over. But I think it's time. I think it's time that we see something like this out of the euro dollar, and thus the Dixie is going to break down. Bitcoin seems to be getting that pullback. So I think we're getting close to that timing window where we could see a swing. Now, how low it goes is anyone's guess. It could be as shallow as that, or it could be all the way down here where I've got it marked, okay? The cycle lows do not predict levels. They simply predict time. But we're getting in that neighborhood now where any kind of correction, any kind of rollover and a swing reversal confirmed by perhaps a trend line break, something like this. And I will be ready to get long and put a stop just below wherever the cycle low forms and see what we can get out of the market. We'll be dragging this position across because we're still holding this position from back here. And like I said, we'll see what the market can give. I'm also feeling a bit weird about this, right? This is undeniably a breakout for Coinbase, but because of where the cycle lows are for Bitcoin, I'm not going to do this now, but you could probably do this in your own time. If you pull up a Bitcoin chart, flick it into line, and then add those Bitcoin proxies, right? Like Coinbase, MicroStrategy, Riot. You add all of these over the top. What you'll see is the cycle lows show up all at the same time. So said another way, if Bitcoin is about to find a cycle low, I would expect these all to pull down into a cycle low. But that data is somewhat contradictory because that right there is undeniably a breakout for Coinbase. So in this case, I should maybe have been respecting this, but I'm deliberately choosing not to because the plan is to load up on those cycle lows. We've got a similar situation for MicroStrategy, right? It's kind of thinking about breaking out. It's held this range break similar to the Bitcoin dominance chart, hasn't it, right? Breakout, retest. So far it's held, looking to resume higher. We've also potentially got breakdown of this upward sloping yellow support line, retest, looking for that resumption lower. So there's a bunch of conflicting data, but I think, typically speaking, from my experience, MicroStrategy will find a cycle low when Bitcoin does. And once we get that swing and a confirmation out of Bitcoin, right? So once we do something like this, pull down, break out and go, I think that is the time for me to add these positions back. So even if I have to buy higher up and have a wider stop, that's going to be my strategy. Same for MicroStrategy. It kind of looks like it wants to roll over one more time and then go. And if it does, I mean, that would be absolutely perfect. Riot seems ahead of the curve here, doesn't it, right? So upward sloping blue support line, which is now resistance twice, and this horizontal range break. So not yet recovered it. Possibly speaks to one final rollover into that cycle low before we go. Now, will it, won't it? That's to be determined. But Marathon also obeying this system, isn't it? Right? Look, right into resistance, and possibly looking to roll over one more time before it goes and confirms with a breakout. So a little bit more patience here. I know a lot of people are getting pretty antsy, right? There's these big green candles show up and people just want to go all in. And that's fine. You do you. But, you know, if I'm right about this, okay, let's hop into a stock market chart. Zoom out a little bit so we can see what's going on. If I'm right about this final move, okay, whether the low is in already and we buy a breakout of this downward sloping red resistance line, or whether we have one more rollover into that cycle low towards the end of this week or early next week, and then we get long out of that swing, we're either looking at, you know, a trade like this, okay, which would be from the cycle low if it shows up, or in the worst case scenario, we're looking at something like this as a break of this downward sloping red resistance line. Okay, so either way, there is major upside here. Okay, maybe we could reduce this 5,600. Okay, this is pretty conservative as well. A lot of people have much higher targets than 5,600, but you can see what I mean, right? So whether we get in, you know, here where it is or down here, it doesn't really make any difference, right? So this little space in the middle, if we zoom in so we can see what's going on, you know, all of this in here is no man's land, isn't it? So there's really no rush from me. And it's the same for the Bitcoin miners, right? Let's zoom out a bit and see what's going on, right? you know, whether we get in here where we are today, or whether we roll over one more time, or whether we get in even slightly higher up, the target is all the way up here, okay, at the prior all-time highs. So you can see why I'm not stressing about this, right? It doesn't matter. What is a few points amongst friends? And we're probably going to, at some point this week or early next week, be back to full exposure. And then if I'm right about this move, then, you know, like I said, there is plenty of space, there's plenty of opportunity to get long. And if we start to truly enter one of these big parabolas, then there'll be opportunity to stack positions on each other as we move up and bull flag, move up and bull flag. There'll be opportunity to continue to build positions as we were doing earlier on in the year. So a little bit more patience and we're going to get there, just so we understand where we are with the stock market. Like I said, you know, hopefully we get one more rollover into that cycle low. This one would technically be quite early. So hopefully we get one more rollover. But objectively speaking, when we get a move this strong, it typically is not followed by a big undercut. So I would say right now, the most probabilistic outcome is that this is the cycle low in here and that it's come early, and therefore we'll be buying a breakout of the downward sloping red resistance line. But there's always a chance that we get a hot CPI print, it forces some big panic puke, and then we reverse out of a perfect day 40 cycle low. So we'll keep going, we'll see how it goes. Here's the NASDAQ, right, hasn't broken. So is this a lower high into resistance that rolls over one more time and goes? If so, we buy the swing. And if not, if it breaks out, then you know the deal, right? We respect the breakout and we get long. And again, we're targeting way, way, way up here. So, you know, what's a few points amongst friends? And for the Dow Jones, you know, the Dow Jones is, the plan all along has been this, right? Buy the breakout of the downward sloping red resistance line. So whether that comes from here, like I had it, or whether it comes from slightly higher up, who cares, right? We'll buy the breakout. And again, we're targeting a measured move off this range break of about 38.2. So again, huge, huge, huge upside from wherever this breaks out from. And you can probably see by now why I'm in no particular rush. Also thinking about, you can see my red squiggle, right? This is the Russell 2K, the small cap index. Break out this downward sloping pink resistance line. And again, I think we can get long here. And I think we can target way, way, way up. So massive opportunity, but there's a little bit of work to do. You could buy here and put the stop below that. That's absolutely valid if that's what you want to do. But for me, I'm waiting for this, and then we'll buy that breakout. So we've been super patient up to this point. We've had a plan, we've stuck to it, and now we're going to get to find out, are we going to break out and get long on cold CPI prints and a near certainty that we've done hiking rates? Or are we going to get that wobble that forces one more undercut into a perfect day 40 cycle low and go from there? Either way, we'll make sure we're on our toes, we'll make sure we're paying attention to the charts and getting ready to go long today if the breakouts occur. And then, as I often say, right, there's a time to be in the market, there's a time to be out the market, and there's a time to go fishing. Once we're fully back in, we'll be going fishing, right? We'll be chilling, we'll be waiting to see what the market gives, we'll be letting the stops do the worrying, and we'll be hoping that we do get that run to all-time highs. So it should be a pretty strong finish to this year, and I'm looking forward to locking down those gains into the end of the year, assuming we can get them. So as always, I'll be back tomorrow with another video, and until then, look after yourselves, take care from me, all the best, cheers, bye.